Consumer confidence drops by the most in 3 years. What's behind it? Let's ask Anna Rathbun of CBiz Investment Advisory Services, and I'm Lisa Bernhard with Reuters. Anna, the Conference Board survey came out today for September, and as mentioned, consumer confidence is down. It's a big drop in the most in 3 years. What is it about the economy in particular, with rates coming down now, and granted this is backwards looking, but what is it about the economy in particular that consumers are worried about?
Well, maybe the rates are coming down because there is something to be worried about. And I think that's what the markets are wondering. Certainly, this particular report, what was leading that downward shift in sentiment really was the labor market. So we know that in the last 2 months or so, we've had some less than stellar, somewhat disappointing numbers from both the ADP report as well as the Bureau of Labor Statistics reports, their monthly reports. And when you're looking at that as a regular American, you might think that the labor market isn't as strong. So the way you feel about the economy may not be as robust as before. Now, why is this important? Well, it's one thing for the labor market to be weak from the perspective of an economist. It's quite another for if you're the person worried about it, because that impacts how you spend your money, how you react to it. And that in itself can actually have a self-fulfilling prophecy effect on the economy. And that is what people are worried about, that it could turn into something else.
And yet there was data today that showed that more people want to buy houses within the next 6 months than the prior month. And we know that, of course, mortgage rates are starting to come down given these Fed cuts. So put the housing market then together for us in terms of inventory and prices.
Yeah, so according to Freddie Mac, since the beginning of July until late last week, average national 30-year mortgage went from 6.95% to about 6.1%. That's a big drop in about 2.5 months. So certainly it makes it more enticing for people to want to buy, and couple that with the rate cuts of 50 basis points from the Fed last week, you can totally make plans to potentially go into the housing market. However, and this is really July number, but not necessarily August or September number, and that is there's a delay there. The housing prices are not showing any signs of falling. Right. So the idea of affordability is still very much in play. And I think that is because there is a shortage of homes. When you mentioned inventory is still not favorable to the buyers. And that rate really needs to come down much more. The Fed needs to continue cutting in order for construction to become more appetizing, to build more homes, and for that supply to really enter the market. And also for people who are sitting on, 4%, 3% mortgage rates to feel like they can actually go out and buy homes and not assume a 7% interest rate. So the rates need to come down considerably more for the housing market to normalize.
The presidential election is approaching, of course, and today Trump spoke in Georgia and gave more information about his policies and in particular tariffs and trying to get companies to produce in America. When you look at the two candidates' economic policies and you see the Fed trying to keep inflation hovering somewhat around 2%, how do their policies sort of play into that?
Well, the big news today is Trump. And Trump is talking a lot about tariffs as a way to sort of force behavior in one way or another. I would look at the Trumps in two big categories. One is like a blanket tariff. Everything that comes into the United States gets a 10% tariff or 20% tariff. Trump has already talked about this. This is not very strategic, and it may have unintended consequences. And it's not always a sure thing that the country of origin ends up paying for that tax. But what he is talking about today, along with John Deere as well as Chinese EVs, are really there's a little more nuance to it. Essentially, what he's doing is trying to get these companies, whether they're American companies like John Deere or Chinese EV companies, to make production happen here in the United States within our borders. So there is a talk of tariffs on items that are made in Mexico that crosses the border into the United States. In terms of Chinese EVs, he's talking about 100% tariffs. In terms of John Deere, 200% tariffs. I don't know how lasting those numbers actually are, but it is really driven to get companies to produce things here. Well, it's actually more expensive to produce things here in the United States. And one of the things that I know Trump is aiming for, that he talked about today, is wages, higher wages. Higher wages, higher prices, everything is more costly to produce here. That is actually inflationary. So when you mention the Fed and its goal to keep inflation around 2%, which is its goal, it make it more difficult for the Fed to achieve that goal in the face of tariffs that are designed to make production come into the United States and essentially make everything more expensive.
And what about Kamala Harris's policies so far? What have you seen?
So what I've seen so far is a little bit light on the details, but essentially she has talked about mostly tax redistribution. So we're talking about helping lower income families, helping with child tax credits. And so there's a lot of shifting of money, essentially. And there's some price fixing that not a lot of economists agree with. Price fixing has its own unintended consequences. But again, it's lighter on the details. We did hear from the campaign that there will be more details to come later this week. So we are definitely waiting to hear more.